Discipline is choosing between what you want now and what you want most. Abraham Lincoln. My friends, if you want to become a market master, a person who can make money in the stock market, then you need to start now and you need to stick with it. The discipline of 10 to 15 minutes each and every day following these charts, setting up your practice trades, your profit and loss bands, using this little measurement tool over here to the left. It is beautiful. Set a long position, set a short position, use your average true range, 1 time to set your stop and 2 times to set your profit. That is a 2-to-1 reward to risk ratio. And then go to work. See how good you can get with your favorite stocks and ETFs. Practice day in, day out. And then once you think you're getting good, you can start doing a little bit of fractional trading, maybe $100 worth of a stock or ETF, and see how well you do. Now, let's jump into these charts. I do remind you, we're not a stock calling service. We're an education firm. We are not giving you market advice. I want you to practice trade with us and practice and perfect to show yourself approved. Let's jump into these charts. We see stocks, bonds, and gold down for the day, Bitcoin up. We'll first go to the S&P 500. What do we see going on there? Got a red down candle in the morning, a doji in the afternoon, down 0.17% at the end of the day. We're above the 200 EMA. We're looking for long positions. But if, of course, things roll over, push back through the 200 EMA heading down, we'll be ready to potentially jump into that, keeping in mind where things are on our success multiplier formula. We have pushed through the 200 EMA on the 2-day. It is green. So, of course, that's 4 points going up. And when we look at where things are on the weekly, it has turned green over the course of this last week, and it is heading up. So that's 10 more points. Plus, we see that the half day itself is green, so that's 15. That's as high as you get. If you haven't taken that success multiplier formula, I'll put it at the end of today's training video so you can understand just what I'm talking about. I think you will love that idea. It takes into account and actually helps you put in, based upon the size of the wave, the amount of strength you see behind moves. Now, we're down 0.17%, as I said, on the S&P. We're down a little more on the Nasdaq 100, 0.80% down in the morning. A doji spinning top there in the afternoon. We're above the 200 EMA on the weekly, in the green there on the STC. In the green on the STC on the 2-day chart, and we're pushing up. We've, on these last two-day candles, the wicks have hit that 200 EMA. Like I said, green on the STC. And of course, we can see where last week things crossed over on the weekly. When I say crossed over, we went from red to green on the STC. So again, we are also at a positive 15 on the success multiplier formula. So of course, we're looking for up trades. If things do crash and rotate back through the 200 EMA, we can of course consider making money shorting. Now, let's move from the stocks on into the bonds. That is the 20-year U.S. government bond, down big time, 2.36% for the day. We talked about this yesterday. We jumped in when things rotated over going down, went from green to red. And then what did we see happen? Well, we saw things bump down in the afternoon and then pop up for a day and a half. But as we looked at what was happening with the volume, we saw that the volume popped and then it started decreasing as the size of those candles decreased, and we got a spinning top there. Then what happened? Jacked down strong on Friday morning. About the same in the afternoon. We just were explaining, hey, it never hurts to get a little bit of additional information. We didn't have our loss band, so we stayed in and have been rewarded a little bit. Now it could pop back up on Monday and take us out. We shall see, but of course we're looking only for short positions because we're below the 200 EMA on that half-day chart that's in the red. We look at where we are on the 2-day. It is in the green on the STC and the weekly. It went into the green this last week, so we said we had some trepidation jumping into that move, but you can see where it did start off with a higher high for the week, but that candle is reducing. So we're very, again, we're practice trading this one. We're very questionable on it, just watching it, just learning, just taking notes on it. And again, it's all those kind of things you need to do at every single opportunity. They're all learning experiences if you use them that way. Now let's move on to gold. Where is gold? Gold is down for the day 1.11%. We're below the 200 EMA. We're in the green. Been in the green a while here. But again, looking for short moves only because we haven't moved above the 200 EMA. The 2-day is in the green too. It's below the 200 EMA. We look at the weekly. And like all of our charts so far, we see where we came down and bounced off the 200 EMA. This is the first big green up week we have seen for a while. STC is still negative. So we'll keep our eye on things and see where gold goes this next week. If it rotates over going down, then of course we'll be looking to jump in and short gold. Now, lastly, we will move to Bitcoin. Where is Bitcoin on our chart? Up 2.25% for the day. We've popped up on Bitcoin and hit the 2340, 2350 mark a couple of times right around here. Right now, of course, we are below that. We're waiting, watching, seeing if Bitcoin's going to show us any kind of breakouts. As we look at where we are, we're well below the 200 EMA. And again, this is the XBTF, the VanEck Bitcoin. It says it's a Bitcoin trust. What it is it's a short-term Bitcoin future. It's traded on regular markets. You don't have to have one of those crypto exchange accounts, nothing like that. You can actually buy and sell this. It is an ETF. So again, if you're going to do a little practice trading, a little trading with 1 or 2 shares, hell, it'll cost you $22 to buy a share to see how well you can do with it. Now, we're not in it right now because we don't have anything to pull us in it right now. When we look at where we are, we don't have anything that's telling us to jump into Bitcoin at this point. We can see where it's below where it's tried to break through here recently on the half day. On the 2-day, again, bottomed out, has popped up, but just sort of sliding sideways. On the weekly, we can see where, again, the prior 2 weeks we hit higher highs. This week, candle is a little higher, but actually smaller than the last 2 weeks and didn't hit the highs. So we're waiting for Bitcoin to recover, waiting for that whole crypto space to potentially recover. How long will it go? I don't know, but we can read a chart, and when it recovers, we'll be ready to practice trade it again. That's where we are, folks. So appreciate you being with us. We have a great training for you in your show notes today, the Monday Effect. If you are not signed up and are not receiving our daily email, which includes our daily reviews every day of the week except Friday, where you get your weekly review and forecast, you're not getting those daily trainings. You need them. Go sign up for free. That list is never spammed, never shared. And also Patreon supporters, thank you so much for being with us. Do not forget, this Wednesday, we will be having, I believe that's the 10th, Wednesday the 10th, we will be having our live question and answer call-in session for Patreon members. Go ahead and get your questions in, the ETFs and stocks you'd like us to help you backtrack and get prepared for doing some practice trading. We love spending time with you guys live. If you can't join us live, go ahead and send your questions in. We always endeavor to record that and get it out to you the same day. If you're not a Patreon member and want to join in, then you need to become a Patreon member. Follow the link. Thank you so much, my friends. God bless. All the best from the whole team at Charting Wealth World Headquarters.